Hey, welcome. Good to see you here. Actually, we are live today, Saturday, just to this live stream supposed to have come up last Wednesday, but for certain technical glitches. So you are welcome. Well, just drop your location in the comments. Let me know where you are watching from. And I want to appreciate those that have watched, even the one that was not complete. I want to appreciate you. Thank you. And we are making this broadcast so that everyone can have the opportunity of hearing it. Okay, let's get straight into it, because what I'm about to share with you today could literally save your business thousands, maybe even millions of naira. Here is the truth that nobody is telling you clearly enough. If you run a business in Nigeria and you haven't reviewed the new tax laws, you may already be non-compliant. Let that sink in. Not you might become non-compliant next year. You may already be breaking the law as we speak. And the penalties, they are no joke. So what exactly changed? Between late 2024 and early 2025, Nigeria introduced what many are calling the most significant tax reforms in over a decade. The tax reform acts include changes to the Nigerian Tax Acts, the Tax Administration Acts, and others, just as a new law for new revenue service and joint revenue board was introduced. These are fundamentally change how business are expected to operate, report, and pay taxes. And here is the thing: these aren't future plans anymore. They are active. They are being enforced. And ignorance is not a defense. If you're a business owner, an entrepreneur, a founder, a freelancer, or you offer any kind of professional service, this live stream is specially for you. Especially for you. Hit that like button right now. Share this stream to your WhatsApp status, and let's make sure every Nigerian business owner understands what is at stake. Well, my name as usual is Jeta Obukola, and today I'm breaking down everything you need to know in plain English. No complicated jargon, so you can protect your business and stay on the right side of the law. Ready? Let's dive in. Why the reforms happened. First, let's understand the why behind these changes. Because when you understand why the government did this, you will better understand how to respond to them. Nigeria has historically had one of the lowest tax to GDP ratios in the world. We are talking about 6 to 8%, while other African countries are at 15, 18, and even 20%. The government looked at this and said, we need to fix this. But it wasn't just about collecting more money. The old tax system was honestly a mess. You had multiple agencies, sometimes asking for the same thing. You had confusion about what applied to whom. You had businesses that wanted to be compliant but didn't even know how. So, the reforms aim to do three things. Number one, simplify and harmonize the tax laws. Make them clearer and more unified. Number two, widen the tax net. bring more people and businesses into the formal economy. And number 3, embrace technology. Move everything digital so there is more transparency and less room for, let's call it, creative accounting. Now, those goals sound reasonable, right? The challenge is in the execution and what it means for you specifically. Drop a number 1 in the chat if you are following me so far. I want to make sure we are all on the same page before I get into the specific changes. Let's look at some highlights of the reforms. Okay, let's bring down the 3 biggest changes you absolutely must understand. First is harmonization of tax laws. What does this mean? Essentially, the government has worked to consolidate and streamline various tax legislations. We now have clearer definitions of what constitutes taxable income, clearer rules on deductions, and more standardized processes across different tax types. For example, the treatment of value-added tax, VAT, company income tax, and withholding taxes now follow more consistent principles. There's also been clarity on taxation of the digital economy, which we'll talk about in a moment. The good news, if you understand the new framework, compliance becomes more straightforward. The challenge, you actually have to learn the new framework. What you knew before 2025, some of it no longer applies the same way. Second, and this is big one, expanded powers of tax authorities. The Nigerian Revenue Service, which replaces Federal Inland Revenue Service, and state tax authorities now have significantly enhanced powers for enforcement, investigation, and collection. And what does this look like in practice? They can now access your financial information more easily. Bank statements, transaction records, third-party data, the walls that might have protected you before, they are much thinner now. They have stronger powers to seal premises, freeze accounts, and pursue legal action against non-compliant businesses. And here is what many people don't realize. There is increased collaboration between tax authorities and other government agencies. So, if Nigerian Revenue Service, NRS, wants to verify something, they can cross-check with CAC, the Corporate Affairs Commission, with banks, with customs, with state agencies. The days of flying under the radar, they are ending quickly. Digital compliance. Third, and this affects almost everyone, increased emphasis on digital compliance. If you are not already filing your taxes electronically, if you are not registered on the relevant portals, if you are not maintaining proper digital records, you are behind. The government has invested heavily in technology infrastructure to track transactions, monitor compliance, and flag irregularities. They are using data analytics. They are building systems that can identify discrepancies automatically. For businesses operating online, offering digital services, or any income through platforms, there are now specific provisions addressing you directly. E-commerce, fintech, digital freelancers, you are all clearly captured now. And for everyone else, electronic filing, digital record keeping, and online tax payments are becoming the standard, not the exception. Quick question for the chat. Quick question for the chat, and I want your response. Have you registered on the NRS, Nigerian Revenue Service, formerly Federal Inland Revenue Service, Tax Promax platform? Have you? Drop yes or no, whichever is yours. I'm curious to see where everyone stands. Interesting. Okay, if you said no, please make that a priority this coming week to make sure you are registered there. It is not optional anymore. So let's look at who are the most affected people. Who is most affected? Now, who needs to pay the closest attention to these reforms? While technically everyone is affected, however, three groups are feeling this most intensely. First, small and medium enterprises, SMEs. If you are turning over more than 100 million annually, your compliance obligations have increased significantly. There is more documentation required, more frequent filing, and more scrutiny. Second, growing businesses. You know those companies that started small and are now scaling. Maybe you've been operating informally, and now you are getting bigger contracts, bigger clients, more visibility. Congratulations on the growth, but also you are now firmly on the radar. The informal to formal transition is no longer optional. And thirdly, professional services, lawyers, consultants, accountants. Yes, the irony, doctors running private practices, architects, engineers, coaches, trainers. If you are earning money from your professional expertise, the tax authorities are paying very close attention to this sector. Why these groups? Why are we talking about these groups? Because historically, there has been significant underreporting in these categories, and the government knows. Let's just look at a practical example of somebody in the formal sector moving to formal sector. Let me make this real for you. Let's compare a small business. Let's call it Mama Nkechi Catering Services in 2025 versus 2026. In 2025, Mama Nkechi was running a catering business with annual revenue of about 40 million. She had 18 tax identification number, but honestly, her compliance was, let's say, relaxed. She filed returns occasionally, paid some estimated taxes when she remembered, kept her records in notebooks and on her phone. Her accountant will come at year end, look at her bank statements, make some calculations and submit something to the then FIRS. Not perfect, but she wasn't losing sleep over it. Now, fast forward to 2026. Same Mama Nkechi, same business, similar revenue, but everything is different. First, she now needs to file VAT returns monthly and remit on time if is above the threshold. Failure to file, automatic penalties. Second, she needs to maintain proper digital records of all her transactions, not notebooks, actual accounting software, or at minimum, organized spreadsheets that can be audited. Third, she's required to issue proper invoices with her TIN, but this year, 2020, to be tax ID displayed. Our clients, especially corporate clients, are now demanding this because they need it for their own compliance. Fourth, any payment she receives from companies now have withholding tax deducted as source more consistently. So she is seeing less cash its her accounts, and she needs to track and credit those withholdings properly. Fifth, if she's focusing, if she's using any payment platforms or POS systems that transaction data is potentially visible to tax authorities, there's a digital trail. What's the impact? If Mama Nkechi doesn't adapt, she's looking at potential penalties that could range from 50,000 to several million of naira, depending on the violations. Repeated non-compliance could mean a business account being flagged or frozen. But here is the flip side. If you get a house in order, if she complies properly, she now has clean books that help her access business loans, win bigger contracts, and sleep well at night. That's the choice every business owner is facing right now. So, what should you do right now? Here are your immediate action steps. 1. If you don't have a tax identification number or a tax ID, get one immediately. It can be gotten so easily. No excuses. Number 2, register on the Nigerian Revenue Service Tax Promise Portal if you haven't already. Number 3, review your current tax filings. Are you up to date? If you are behind, start the process of regularizing your status before the authorities come to you. Number 4, invest in proper accounting. Whether it is a software, a bookkeeper, or a full accountant, you need proper records. 5, and this is important, consult tax professional. Not your cousin who knows about these things. An actual qualified tax advisor who can review your specific situation. Look, I know this feels overwhelming. The government has moved fast, and not everyone got the memo, but that's exactly why I'm here. This is the first in a series of content that we'll be sharing to help you navigate these changes. Subscribe to this channel, especially on YouTube. Subscribe to our channel and click the bell. Follow our page and turn on notifications so you don't miss anything. If you find this valuable, share it. Seriously, screenshot this. Send it to your WhatsApp groups. Share it on your stories. There are business owners out there who are about to make expensive mistakes simply because they do not have this information. Drop any question in the comments. I'll do my best to address them, and the most common ones will become future content. Remember, compliance isn't punishment, it's protection. It's how you build a business that can last, that can scale, that can access opportunities. Thank you for watching. Stay compliant, stay profitable, and I see you in the next one. God bless.